Hello traders, Gary Wagner here, just about 11 o'clock in Honolulu, 4 o'clock in New York on Tuesday, 23rd of February 2016, and we are looking at a Dow Jones Industrial Average under pressure again today. After trading nicely to the upside the other day, we do have the Dow Jones Industrial off in triple digits, trading off by 188 points at 16,431. Now, we can really couple that with crude oil in that we saw crude pop up yesterday, and today it is back in decline mode, down almost 4.5% at 31.91. Now, in terms of the S&P, and we currently do have a trade on, we're currently trading at 19.75. The low that we've seen is about 1915. We have stops below 1908. And my sense is that we should be able to weather this small daily correction that we are currently looking at. The one thing that is a little bit troublesome is the fact that we have identified a pretty key area at about 1937. That, of course, is a 61% retracement, a 61% retracement of the August decline. And we can see a number of occasions in which the market has flirted with this area significantly, and especially right here, and also the most recent activity, and not been able to take this particular price point out. My sense is that at some point, this particular price point, 1937, will become an area of support rather than an area of resistance. And traders, so there is yet another way to take a look at our current resistance in terms of technical studies. And I draw your attention to this daily chart. It's highly compressed. It's typically a weekly chart, but I wanted to get our simple moving averages, our 200-day and our 50-day moving averages plotted into this particular chart. Of course, when we do that, let's go ahead and blow this up a little bit, but I think what you'll see is quite evident and easy to kind of pick out, and that is this 50-day moving average. That is our current resistance also. The 200-day, that we've got quite a ways to go before we start to tackle that particular area. So we're not back in a bull market yet, but the first step obviously is to make it over the 50-day moving average, and that seems to be where we genuinely are looking at some resistance. So traders, the next chart that I do want to look at today is a daily chart. And this is in Japanese average format, or Henkin Ashi. And one of the things that is quite evident is we have been in a nice little rally mode after finding some real support in the area of about 1830. You can see the pivotal candle right here. You can see we've got a solid bank of red candles till we get the small bodied, and then we get relatively large body size. Now, although we are still green, you can see that we've absolutely seen the body size diminish as it goes and tries to tackle these tops right here. And so my sense is that we will obviously have to take this particular area out. And as I said, I believe that this particular price point, call it 1938, will become an area of support rather than an area of resistance. So traders, lastly, do want to take a quick look at crude oil. Again, crude oil has just been one heck of a volatile market, but I draw your attention to this long-term chart in which we have a clear bottom that comes in roughly at about $34 per barrel. And it is this particular price point that we are currently tackling in terms of the price of oil. And that, as I said, that comes in at around $34, $35 per barrel. Now we're sitting down at about $31.87, and I see a real problem having oil get over, say, $36 a barrel. My sense is that we need to see the equities markets and crude oil decouple again, because although the Standard & Poor's 500 is heavily weighted with large oil companies. There's a multitude of companies out there that use these products that are now 1/5 of the cost that they used to be, and those companies, such as airlines, are profiting greatly. This has been Gary Wagner for Trending Markets. Maintain your current long position in the S&P as well as your stop. We'll talk to you tomorrow for another daily update and review. Bye-bye.